Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Friday, April 11th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's take a look at the US dollar, gold, and interest rates because those are all the big movers here in the overnight session here. So the dollar extended its losses after China raised tariffs on all US goods, with the dollar index falling about 1.5%. As of this recording, we've got a small snapback off of those lowest levels, down about 1% and dropping below the 100 handle. So the dollar has lost more than 6% since the February peak. It is on track for its biggest weekly decline since November of 2022. So the dollar is the latest victim, and treasuries are suddenly trading like risk assets. So the equities, they are seeing wild swings. You look at overnight, we've got another 1,000-point range in the Dow. So gold is the best place to be with new all-time highs overnight. Looking at the all-time high on the June gold contract, 32.55.90. So we will have some earnings come out as far as equity investors with Wells Fargo, JP Morgan, and also Morgan Stanley. So you look at the treasury market, and this is kind of what unfolded in the background this week. So China's holdings of US treasuries, with analysts suggesting that Beijing may be selling treasuries in retaliation for the tariffs. Now it's going to take until about May 30th for us to see the actual change in securities held in reserves, and June 18th for more precise indication when we'll see the US government, they produce their flow data, and we can see who's buying and selling these treasuries. So looking at some of the market movers here today. So we do have Bitcoin up about 3,000, back over the 80,000 mark at 82,790. That's a 3.9% move. We have copper futures, the best performing metal right now, up 2.7%, trading back at 445. So that's an 11-cent move here to the upside. And you have silver up 42 cents. Was up about 70, 80 when I started putting the notes together for this. Kind of came back a little bit as the dollar had bumped back up here. So copper is extending its rebounds here from the lowest close at 11 months on bets that Beijing will offer more stimulus to shield its economy from Trump's punitive tariffs. So if you get copper prices going up, you got gold prices going up, realistically, silver should be a bit higher than where we're at. Now, I say a bit higher, I think more like in the 80 to $1.20 move here on the day. So we're going to want to watch here as far as the day unfolds. How does the dollar trade? How does yields trade? How does the gold market trade? Does copper give up any of its gains? And obviously the U.S. equities. So if we see U.S. equities sell off again, might put some pressure on the copper market, might put a little bit of pressure on that silver market, and gold, again, still getting that boost here. So you check on gold. Gold rising to those record highs and breaking through the double top. What's important technically here when you watch these things, and it's the same thing with the silver when we got to $35. Does it close and then does it run from there? That's what's more important. You don't want to see it kind of peek its head over the fence and then duck back down here, and that's with that gold market. So we'll want to watch gold on how it closes, how it reopens, and things like that. It's a bit of a different scenario from last Friday when we were completely plummeting, and then it was Sunday night, all hands on deck here with a big washout as far as forced liquidation, margin calls, things like that, driving some of the metals and some of the equity markets. So we're finding a bit of stability here. 29.25, again, that key level of support in the silver market going back to the December double bottom, the retest, the breakthrough, and the close above here as far as last Monday's session. And then the gold market, it's tough to tell as far as coming up with specific support resistance levels because of the fact that we're seeing just such wild ranges of volatilities and step up in average true range. Remember to throw average true range on all your charts here, especially for risk management purposes. These aren't the markets where you're just coming in here and speculating on something like gold and silver with a nickel stop or a couple dollar stop. And I was talking with people that we've been actively advising clients on specific trades. One of the best trades that I recommended yesterday was shorting gold with a $4 stop because gold since then's ran $150 higher. So risk management is key on these markets and being active. Remember, we got to trade the markets we're in, not the markets we want. So silver, again, up 40 cents here today. Bit of a dog here as far as the metals are concerned. You got platinum at $9.40 right now, up $6.70. So gold, again, cementing its status here as the ultimate safe haven asset as investors are seeking safety with fears of a worldwide recession. So additional tailwinds could come on this gold market. So how high is too high? Well, if you get the central bank buying continuing, you get interest rate cuts from not only the Federal Reserve, but also global interest rate cuts. So a lot of people are stepping up their expectations on different central banks cutting rates here. So looking at the ETF flows, and this also tells us the disconnect between gold and silver at the moment. And I'm not picking on silver, trust me. I'm a big physical believer in everything else. I think every dog has its day, $40, $50. It's just not, it's a matter of when it's going to take place, not if it's going to take place here, in my opinion, and I'm entitled to it. So exchange traded funds here, what did they do? They added another 455,000 troy ounces of gold in their holdings. And I really suspect that this uptick is more wealth advisors realizing that gold does have a place in portfolios, in client portfolios, like with Blue Line Capital, that's our sister company, our wealth management. We do allocate towards physical gold holdings, exchange traded funds, and also you're going to see some of the miners and things like that. Every component has its position in certain portfolios, and I think that gold is getting more broad-based exposure here from some of these wealth advisors. Now, on the silver side, the flip side, the ETFs, they cut about 18,000 troy ounces of silver in their holdings here, bringing this year's net purchases at 3.87. So when you look at the year-to-date percentage summary in the change here, you got gold up 7%. That's another big jump overnight. So we saw like 5%. We've been monitoring this for a while now, and then you get the jump to 6, then about 6.4, now 7. So they're really jumping into that market here. And then you look at silver, 0.5%. So it's just not getting the love yet here. And you put the gold silver ratio at about 103.5 right now as of this recording. So obviously the ratio has broken out of a range that we haven't seen over the past few years, and it's reaching the highest level since the pandemic. This is kind of a surge in the gauge of risk sentiment. So you get gold at a record high, and it outperforms silver here because silver, well, it is closely tied to the real economy here, because when we break down the demand of silver, and a lot of people forget they forget about this notion here, that silver, more than 54% of it comes from industrial demand. It's things like, these cell phones, this microphone, these TVs behind me and everything else. It's solar panels on my roof. It's everything else like that silver goes into. And frankly, if we're going into a complete recession, am I just going to continue to use the same phone? Well, yeah, I'm probably going to. I'm not going to go out and buy new gadgets and new equipment and things like that. And that's where things really kind of have simmered a bit in that respect. Now you see physical demand go up for investments and exchange traded funds, but I'm not going to go out and buy new silverware. I'm not going to go out and buy a new silver watch or anything else like that. It is what it is, and we have to be real about it here with that respect. Now, I'm not knocking silver. Again, I think it should be up 80 cents to $1.20. Maybe you get a gamma squeeze up to about $1.50, $1.80 on the day, but without that flow here into the market here this morning, and I think we should already saw it in the overnight session, I'm a little bit skeptical as far as its moves. So that's just my opinion. So you check on the outside markets here, you got crude oil recapturing $60 here, and oil prices are headed for a loss of about 3% this week, and it's a 15% drop so far for April. So, the trade dispute has really triggered concerns about global growth, leading to an oversupply in the oil market. Now, the EIA, they slashed their forecast for crude demand this year by about 500,000 barrels a day. So, again, it's not only like silver demand, it's crude oil demand, it's things like that. So perhaps maybe if you see some of this recession talks kind of died down, and we did see a lot of these analysts like Goldman Sachs, JP Morgan, taking down the recession concerns because of the fact that we've seen some of the tariffs here being removed from certain countries. So it is going to help some things here, but really it's this real war going on between the US and China right now. And I think China is starting to ignore some of the rhetoric here. They're focused on their own economy, and they're focused on providing stimulus and backdropping it. And again, watch the copper market. Copper takes out 450. That's kind of that 50% retracement from where we've been. Then you should see silver start to rise a bit with it. So kind of talking both sides on a silver market, but you know, we don't want to just be like drinking the Kool-Aid where we only think the asset goes up. We want to analyze what the inputs are that are coming in to drive these prices in different directions here. So you guys got any questions, reach out. You know, we're going to update. We're tinkering on the chart pack here, some of the color schemes, some of the interaction function with it, things like that. But the principle remains the same. We want to just identify where the trend lines are, where the probable areas that we can go here. Something that you guys can do is you could take from like 29.25 on the silver market. Again, that's where the stabilization has led to. That's where that double bottom from December has come at. Take $35, draw that at the top there, and then what you want to do is run out a fib retracement on there and look at some key levels here as far as where the 38, the 50%, and then that 62% retracement, 61.8 if you want to be precise about it. Retracement is on where the silver market is. And I think that some of those areas here, you're going to have some analysts kind of taking some positions off, and then also some areas where if we get through, especially that 61.8, you get a bit of a gamma squeeze back up to the upside here. So we want to keep an eye on all these different things. You guys have a great weekend here. I'm still going to be packing, still working on that other house. It's coming along. It's just, I'm going to be a plumber this week. I got 3 toilets I got to change. So I don't know. That's going to be a new one for me. I'll be on YouTube, I'm sure, quite a bit here. But anyways, if you guys need anything, reach out to us. Send an email to info@Blueline Futures. Numbers below if you want to call in. You want to talk to any of the guys here. We got a team of guys. We get you out some research, things like that. And then remember, futures and option trading, well, it involves risk of loss, and it may not be suitable to all investors. Good luck, good trading. Go get them. Have a great weekend. Watch the Masters again. It's a great round going on.